All right, welcome back to Bazaar Morning Call. Very interesting discussion lined up. KFin Technologies is on our radar now. It was a good quarter for the company. There was a healthy growth in revenues and profits, while the margins also expanded. We have Sreekanth Nadella, who is the Managing Director and Chief Executive Officer at KFin Technologies, joins us now here in the studio. He's come all the way from Hyderabad. Sreekanth, thanks a lot for joining us, and appreciate you being here in the studio. It was a good quarter for you, as we just mentioned, and on an average, you've seen an AUM growth in excess of 20%, slightly above that. How is the quarter looking, the quarters to come, and what is the kind of growth that you're penciling in for the full year?
So just want to demystify one thing about our organization. So mutual funds is a large business, but then there is about 30% plus of business which doesn't come from the mutual funds. So the AUM that we track to the mutual funds is very, very critical. As you rightly said, we kind of end up 20% higher than the market. We believe that we'll continue to see the trend through the year for the rest of the 2 quarters as well, especially given the Q3, Q4 of the preceding year, there was actually a dip in the AUM, the corresponding revenue for us too. So we expect to see a high-teen revenue growth. In our revenue profile for this quarter, if you see, the non-mutual fund business grew by about 45% year-on-year, whereas the mutual fund business grew about 16%. We continue to believe the younger and the faster-growing businesses will outpace the mutual fund business by a factor of 2, and over a period of time, basically occupying at about 40% of my total revenue pool.
And 40% is your market share as well, right, in this space?
In the case of mutual funds, no, the SIP is about 40%. SIPs, yeah. The equity AUM is about 36%.
Okay, and what would the growth there look like in terms of, I'm just trying to understand in terms of market share, where do you hope to be over the next 1 year?
Market share is a factor of, so we measure it in multiple different ways. The number of asset management companies in India, we manage about 60% of those by number. The AUM, which my clients manage today, we manage 35% of that, the total pool. It's important to again take a look at what is the revenue-bearing AUM versus the non-revenue-bearing AUM. The equity portion gives us the highest quantum of revenue, just the same way it does for the fund manager too. The passive and the money market money that comes into the overall AUM, though it shows in the mix of the total AUM, it's not a revenue-generating mix. So the revenue-bearing component, we have about 35% of the overall market. SIP, which is a leading indicator in terms of where the revenue-bearing AUM will grow over a period of time, today we track to about 41%. So we believe that in the medium term, we should get to about 41% on the overall AUM.
Sreekanth, hi, good morning. Sorry, you're saying equity AUM is a share of, that's a market share, you're saying?
36% of the market share, yeah.
SIP is about, you said 41%.
That's right.
And what we've been seeing is the SIP flows have been very steady, whereas the discretionary portion has been coming off. I mean, actually, it's in the negative. It depends on how you calculate it. But SIPs have been growing to new records every month. So that is the one which needs to be tracked out of the entire equity component. I mean, what is the...
That's a very, very important factor to track because that is the sticky retail investor money that flows into the market as against the discretionary one-time lumpy investments that come through the corporates. And that eventually over a period of time drags up the equity market share, equity AUM market share of an entity like us, right? So at 40-41% of market share on SIP book and at 35 to 36% of the equity AUM market share, the delta of 600 basis points is what we believe we will continue to expand over a period of time.
All right. Hi, Sreekanth. Good to have you in the studio. A couple of questions then. You told us that the top line growth, revenue growth will be in high teens. What about margins? Now you're in the mid-40s.
Yeah.
What should that look like? Point number one. Point number two, you have cash in your books. And some part of the street or sell-side analysts, they are believing that there could be some M&A in the works as well. Are they bang on sometime this year, second half of the year?
Thanks, Nigel, for that question. So we have been constantly, growing inorganically too. Over the past 4 years, if you see, we've done 4 acquisitions, one every single year. We drive our acquisition strategy either way to get into, drive more depth into the business. Back in the day, we acquired Sundaram BNP Paribas mutual fund business, the R&T business, my apologies. We have grown our international business through an acquisition of the transfer agency arm of Deutsche Bank in Malaysia. So on and so forth. So basically, yes, the cash on the books is largely meant for acquisitions. We haven't paid out any dividends. You might have identified that too. It's largely because we believe there is a very significant growth opportunity out there in the world. Let me tell you, where we are anchoring ourselves is to be a global fund administrator. Now, global fund administration is a $12 billion business. You would be surprised to note that there isn't one single Indian company who occupies any, takes any slice in that particular pie. And we intend to be that. We've done that in the IT, we've done it in the ITES, we're now doing it in the manufacturing, but not in the capital market infrastructure space. So we want to be the first Indian company from that standpoint to be a global fund administrator.
So we watch out
revenue opportunity.
Revenue opportunity.
All right, so we watch out for some inorganic growth in the second half of the year. That's what we're trying to indicate. Just give us a few numbers. Cash in books, the updated number, and the margin band.
So we, as of 30th September, we are on about 375 crores of cash.
Okay.
Probably as of today, we should be up more north of 400 crores.
Right.
We believe the acquisition, the margin profile, we would be range bound into 40 to 45% is a number that we believe, though we may be in a position to do a little bit more, we would want to plow back into the growth of the business. If you saw our business expansion, this year we won a contract in Thailand, with Bank of Ayodhya. And that comes with itself a certain amount of business development expenditure, so on and so forth, without which ideally my margin should have been higher. So basically, we do not want to drive more margins as much as drive more growth at this point in time.
There's also an IMS contract that you signed with LIC Pension Fund. What's the quantum of that, and what is the kind of revenue potential that you see from there?
The quantum of that is about 25 plus crores over a 5-year period, and we would be managing, we are given the opportunity to design the entire front, middle, and back office system from investment management for the LIC Pension Fund Manager, who, if you saw, is basically the best performing PFM in all of the national pension system category today. With that, we manage 70% of all pension fund managers in the country. We manage about 60% plus of insurance funds. And in the case of mutual funds, 6 out of the 40 mutual funds we manage from a platforming standpoint.
And the great thing is your relationships are sticky. I mean, these are entrenched and long-standing. So it's not as if somebody else is going to come in and suddenly start to take away clients, etc. Just one last question: what percentage of the business that you manage you would describe as cyclical? I mean, we're in a great phase for markets. I mean, on the issuer side, on the fund side, everything, right? It's booming. But what percentage of your, say, revenues are cyclical in nature as a percentage?
So mutual fund business, of course, has a component of net flows and the mark-to-market. To that extent, you can call it, a certain extent, cyclicality will hit it, if the markets were to have a downturn. But what we've seen of late, Prashant, is that every time there is, markets going up, for example, you would start seeing that there has been a sell in mutual funds. That actually the net outflows have been higher. And that, in some sense, marks the, the maturity of the Indian investor at this point in time. And when the markets are down, there is more inflows coming up. So they have been having a compensatory effect, if I may. So we believe to that extent, though it is cyclical in nature, it hasn't the impact we haven't seen much in terms of the continued expansion of the AUM. Our corporate registry business, where we manage 5,700 plus clients in this country, starting from the largest company from market cap to the smallest, that revenue model is more portfolio fixed fee. So to that extent, the cyclicality will happen only when there is a mass exodus of demat holders, from the market, which is something that we do not see either. So broadly, I would say
the issuer side may be a little cyclical. I mean,
the IPO revenue, yes, could be cyclical. But again, the IPO revenue as a component of the overall revenue is less than 5%. So to that extent, we're reasonably.
All right. It was a pleasure having you here in the studio. Thank you for joining us.